Today was a really solid day. We ended up closing out $15,000 in realized profits, which is awesome. And we did take a massive loss here on Nike for $24,000. And so my goal here is to go over all of the trades that we closed out today and to explain why we ended up closing them out and ultimately where I plan to be potentially re-entering these things going into the next couple of days. We're going to start with the first position that we ended up closing out today, which is going to be CRM. And this position was a really solid trade that we had. Basically, if you look at CRM, we've been in a strong downtrend for the past couple of weeks, and we've been trading underneath of our market bias. So if we go and set up our market bias, we're going to set this to a daily chart, and this is going to show us basically a stronger trend versus the 4-hour that we're currently in. And we've been trading underneath of this market bias basically, since the beginning of April. And so as we saw the Smart Money breakout to the downside, we were looking to potentially trade this and take profit somewhere around $268. And so you can see that earlier today at 9:38 this morning, we ended up closing out our position for a $6,000 profit. Now, later on in the day, we actually closed out another profit for $2,500 on CRM, where price bounced up and tested this resistance level of about 274, and we ended up going short up here. And on the 1 minute, we just sold off drastically for the rest of the day. And so about 2 minutes before close, I decided to myself, I would just take my profit on CRM. I still think that we can sell off down to $264, but with, nearly a 15% return within about an hour, I was very happy with just taking my profits and walking away from the position. Another small trade that I ended up closing out today was Airbnb for a $1,300 profit. And basically with Airbnb, we were looking at the same type of setup. We're trading underneath of the market bias at the time. We ended up breaking structure of 159 and price had pushed its way back up into 164. We were looking to go short here to take our profit down at about $149. But as we approach this support level, we have a liquidity level sitting here at 155. And I know that with earnings coming up in about 7 days, the chances of us probably breaking down to 148, 150 are low until earnings happens. So I thought to myself, there's no point in me just tying up capital, paying theta decay, holding through earnings. I'd rather just take the position off the table and move it on to something else. So that's what I did. And we ended up closing that out for a very small profit, but still a profit is a profit. Now, we also closed out the S&P 500 puts that we had and some calls. These were both day trades. And then the big one that we ended up losing as far as swing trades today was INTU as well as NKE. So NKE was the big one, right? Nike, we didn't necessarily do anything wrong. It's just a complete shit position that just sometimes happen, right? So if we look at this and we get rid of our Fibonacci, you're going to see that we had that break of structure up here at about $95. We were waiting for price to pull back down to our optimal trade entry of 93. And then overnight, price sold underneath of our level here, which is our stop loss of 92, and then sold off even lower to about $90. And so I closed out my loss today. Saw a little bit of a bounce when the market rallied, but it wasn't able to hold. Now, I think that there's a chance that we could bounce here, but the reason that I didn't hold it, even though we're probably going to bounce on the 0.786, is because we're in a downtrend, and the fact that we're in a downtrend just means that overall I'm taking on more risk. So I'd rather close out the position and just move on to something else. Getting over a bad position is like getting over a toxic girlfriend. Like, you just need to move on to the next one and clear your mind as fast as you possibly can. Because the thing that you'll realize is that it wasn't that special. That trade wasn't that special. That trade wasn't going to change your life. It wasn't going to make everything better for you. At the end of the day, it was just another trade, and you have to treat each and every single one of them that way. Now, looking at INTU, this was another loss where we ended up entering this back here on the 30th yesterday and closing it out for a loss. So INTU, this same thing, didn't really trade this wrong mechanically. We had break of structure at $640 right here, optimal trade entry, which is where we entered, and we saw price sell off. To be quite honest, looking at this just by my eye, I think we're going to bounce probably right here, and I probably sold at the worst time. But because we're sticking to our strategy, I decided to close because at the end of the day, like I say this all the time, but we don't need to be taking the best entries, the best exits, the best positions. We just need to be taking proper risk management, trading a strategy that we know works well over thousands and thousands of trades, and then just consistently doing that over and over and over without being impatient and sizing up too quickly. Now, the final position that we ended up banking today was like really, really solid was IWM2. We ended up closing out IWM for a $6,000 profit, which we ended up entering yesterday. Now, IWM, we closed 12 grand on yesterday. And then as it sold off, we ended up entering, saw a big bounce off of this here on 195, closed near highs today. So here's the thing, right? This is the inverse to Carlo effect. So normally I sell too early. Today, like I sold at the perfect time. And it's because as price is pushing up to our target, right? Like what's the risk versus reward? I'm up 6 grand. I'm up, whatever percentage this trade was, right? For IWM. So it was a pretty hefty percentage. I think it was like 40%, 32%. So it's like, I'm up 32%. How much further can this go? What am I going to make? Maybe another 10%, but risk the house, which would have happened. I would have ended up actually losing money on this trade today. So overall, very happy with that. And sometimes it's better just to close conservatively. The other thing I'll say too is to close into strength and into resistance. So everybody wants to take a profit when price is going to push into a higher high, but there's a much better chance that price is going to push into an equal high before pushing into a higher high. So that's why I wait for price to pull back so that we have enough spread between our entry and equal high, and we don't need the higher high to actually make money. If it just happens, then it happens, and it makes things better. And then the final position was TXN, which we ended up closing out today for a very solid profit as well at the absolute opportune time, right? Same deal. I was looking for a potential push up into higher high, but I was up a lot. And if we take a fib from swing high to swing low, you can see that if we were going to reject today, it was going to be at 179. And that happened to perfection. So I actually ended up entering again long today, and I'll be setting a stop loss at about 174. I hope this video helps, guys. Thanks for all the support, and I'll see you guys next time.